July, and this time the hero was the Bank of Japan, which announced its decision on a further monetary policy. The US Fed Reserve will also make a similar statement tonight, but it will hardly announce a surprise decision. The odds are that the US Central Bank will leave its monetary settings unchanged, so investors are looking forward to the comments of the rate setting committee and, of course, Jerome Powell's press conference. In his speech, the chairman is expected to open the door to a rate cut in September, although it's possible that the head of the Fed Reserve, usually very cautious in forecasts, and will not change his principles this time either. Moreover, the US labor market is still tight and key employment data will be released only on Friday. You can find out how economic statistics influence the currency markets in our traders' calendar. In the meantime, let's discuss what's happening in the currency market today. On July 31, the US dollar index, which shows the greenback's performance against six major currencies, fell to the lower border of the range between 104.50 and 104.20. All in all, the US dollar index plunged to more than 1% during the second month of the summer. At the same time, the yen, which began the month near a 38-year low, recovered to a 12-week high. Curiously, the permanent worst performer in the six-currency dollar basket is now taking the lead. The chart of the dollar-yen pair clearly reflects the influence of the policies of the leading central banks on the market sentiment on the forex. So the currency market has reached the tipping point as the gap between the US and Japan's central banks has narrowed. Today, the Japanese regulator raised the key interest rate to 0.25%, and the governor warned that the Bank of Japan intends to stick to a hawkish monetary policy in the future. The Wall Street benchmark index was also under selling pressure yesterday. Artificial intelligence dropped the S&P 500. In other words, shares of AI-related companies went through a sell-off. For example, Microsoft's quarterly report greatly disappointed investors, as it turns out it can take a long time for the investment to pay off. So the S&P 500 left the area of 5,450 instantly yesterday and sank below the support of 5,390. Today, the index is consolidating in the range of 5,401 and 5,489 in anticipation of the Fed's policy decision. Importantly, the policy statement by the US Central Bank is not just the highlight of the day. It will determine the dynamics in the markets for the whole months ahead. If Jerome Powell deviates from his principles and directly announces the start of monetary easing as early as September, the US dollar will begin a period of prolonged weakening. In this case, all major currency pairs are likely to change the current trends to the opposite ones. Of course, volatility will increase significantly. The euro-dollar pair has already traded in the first half of Wednesday with a turbulence declining in the range of 1.2808 and 1.2833. Having touched the critical support level of 1.28 yesterday, the single currency recorded and began a correction. From a technical point of view, this level still acts as support and allows a gradual recovery of the euro. Although the inflation reports on the euro area published today are preliminary, they were still able to influence the euro's forex rate. Fresh CPI rates have raised questions about whether it's appropriate for the ECB to announce the second rate cut, so the ongoing euro's growth is in line with the expectations that the ECB should not rush to cut the refinancing rate in the coming weeks. According to flash estimates, the consumer price index in the EU increased by 2.6% year-on-year. The CPI was 2.5% in June, and analysts had projected a decline to 2.4%. As we see, the information flow today raises one wave of volatility after another. China's financial authorities have no reason to relax. Data published today show that manufacturing activity in the country has been declining for 3 months in a row. Thus, Beijing will have to take additional stimulus measures because of protracted real estate prices and a weak labor market and holding back economic growth. The geopolitical background has driven a rally over oil and the gold prices today. Brent, for example, jumped above $80.60 per barrel following reports from the Middle East. Oil prices not only rebounded from 7-week lows but also immediately rebounded by 1.5%. However, given that the market is waiting for the results of the Fed policy meeting, the Brent price slowed down its growth within the intraday corridor between 78.40 and 80.20. After Tuesday's 2% fall and the earlier 8% plunge, analysts might suggest strong bearish momentum. In such conditions, as a rule, the market ignores both technical factors and fundamental analysis. There are technical signals that the asset is a result. It was reported that the Hamas leader was assassinated in Iran, hence it makes sense to predict a pullback in the Brent price at least about the level of 80. The Russian ruble is unwilling to weaken, however, the shrinking supply of currency will inevitably lead to its weakening since the tax period has already ended. Meanwhile, there are signs that the ruble is set to lose ground. The US dollar will rise above 87 rubles in the short term. Most likely, the dollar-ruble pair will settle at about 80. You have watched the Forex market review on the InstaForex TV channel. We wish you profitable trading. See you soon.